Hello, everyone. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. I'm excited to welcome you to the last edition for this week on the Forex Morning Mastery, where we are going to be reviewing our performance so far for this week and, of course, prepare ourselves strategically for the final trading day of the week and of course of the month. And in fact, today promises to be another opportunity for us to recoup whatever losses we've incurred during the course of the week or during the course of the month. And of course, we all know that the end of the week, end of the month trading activity usually comes with high level of volatility as market participants round off their trading activity for the month and of course strategically positioning themselves ahead of the new month. And due to this, we might likely see some profit taking activities resulting in price action moving in the opposite direction of the prior leading price action, and this could give us some moving on. So you do not want to miss out on these ideas we are going to be deliberating on today. So once again, I welcome you on board and encourage you to actively engage in the comment section. My own name is Sheriff Daramola, and for the next 30 to 40 minutes thereabout, I will be taking you on a trading journey where we shall be evaluating the financial market together through the lens of fundamental and price action based analysis. So stay tuned in, guys. And for those of you who join us for the first time, you are highly welcome on board. Very glad to have you around with us this morning, and I do hope you are going to be finding this session insightful and interesting, helping you to make your own independent trading decision. So with that being said, today we are going to be starting our session with our daily routine by keeping tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, we are going to be taking a moment to also look at what has been going on through the course of the week. And you know how important checking our economic calendar is. This allows us to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves for the next move. Now, based on the asset we have been monitoring since the beginning of this week, we have been focusing on events from both the United States and the United Kingdom economic docket. However, it's important to also emphasize that this week wasn't more of the UK, as we had absence of top tier economic features from the United Kingdom. So instead, the United States economic docket has been the major driver of the market we are monitoring this week. Now, looking at what we have here from Monday, August 26, if taking into account the mid-tier and top-tier economic features, Monday we had the durable goods order, which gives us an insight into the manufacturing sector of the United States, and of course we saw very good figures coming in. We had a 9.9%, 10.4%, both higher than market had expected. Then we also had speeches from Fed officials like Daly, we had Walla, we had Catherine Mann from the United Kingdom, and of course Bostic from the United States as well. Then one of the major key components for economic event for this week didn't come until Thursday, August 29th, and we were looking at the gross domestic product annualized for quarter two from the United States. And for those of you who do not know, the GDP is considered to be a key economic indicator. Though expressed in annual growth rate, it measures the total value of goods and services produced by the US economy in the last quarter. And of course, this data serves as a gauge for us to know how well the economy has expanded. And of course, looking at what we had here, after market had projected that there is going to be a 2.8% expansion in the United States. We saw the data come in a little bit higher than market had expected, had 3.3% expansion, which was a very good signal that the United States economy is still resilient and there is no sign of recession coming soon. Then yesterday as well, we looked at a labor oriented data, which is the initial jobless claim count, and this data here gives us an insight into how well the labor sector is doing. And of course, a figure lower than the market has projected is usually a good signal that that sector is doing very well. Now look at what market were looking forward to. They were looking forward to a 232,000, and the previous month came in at 233,000, and look at what the data came in at, 231,000, showing us signs that the labor sector is still staying afloat in that regard. Now things as from all ramifications now, it is quite clear that the data coming in from the United States has been very positive, showing us signs that the US economy is still resilient at this point in time. And of course, as a result of this, we've seen the market lean towards the US dollar in the last couple of days, giving the US dollar some positive traction in that regard. Now, will this positive traction continue? Considering the fact that Fed are considering cutting interest rate next month, we've seen speeches from Bostic, Walla and Mary Daly, all of which are supporting the idea of an interest rate cut. Will this be a turning point for the dollar again to continue its downtrend, or has the market already priced in this interest rate into the market so far? So today we are going to be looking forward to another high impactful event coming in the form of the core personal consumption expenditure. Well, this is an inflationary data here. It measures the inflation by tracking prices of goods and services, excluding volatile food and energy cost. Now, a higher CPE reading indicates stronger inflation, which can lead to stronger US dollar as investors seek higher return in the US economy. So we are looking forward to this, and this event will be coming up in about 4 hours from now. So we do want to be around when this happens, as it will be giving us a clue into the magnitude at which the Fed is likely cutting interest rates. So now everyone knows the Fed is cutting interest rate next month, but what we are not sure of right now is what magnitude will it be. Will it be a 50 basis point or a 25 basis point cut next month? We don't know, but what we are going to be using to know, what market is going to be using to know, is the rate at which inflation is increasing, which the core PCE is one data everyone will be looking forward to decide that. Then if we listen to the Fed chairman during his speech at the Jackson Hole Symposium last week, it did emphasize that they are waiting for one more labor data to decide how big the cut is going to be, and that is going to be the NFP data, which is coming up next week, and that is another key event that everyone will be looking forward to. So I'm of the opinion that we might not likely see a good traction or a strong traction either in favor or against the US dollar today as a result of the anticipation of the NFP. But we never can tell how the market will react, and of course prepare for the next month, especially on the last trading day that we are heading to today. So at this point in time, we're looking forward to the core PCE. This is a major event everyone will be looking forward to today. So besides this, there are no high impactful events except for some mid-tier economic features like the Michigan Consumer Sentiment Index, which is not really something that could drive price today, really. So let's mark out our timing on the core personal consumption expenditure ahead of today's session. So with that being said, let's dive right into the chart. Let's look at what is really going on in the market and how market participants have been reacting or digesting to the latest development in the market. So the first asset we are going to be looking at this morning is going to be the US Oil Spot, and the US Oil Spot, you would agree with me, is the most profitable asset on our watch list so far this week, as we're currently running with over 600 to 700 pips in profit on this particular asset. Though we had a loss on Thursday. Is it Thursday or Wednesday? We had a loss around the breakout of the $74.80 area, which did not do very well, but the average P&L on this account is over 600 pips in profit on this one. And let's quickly look at what really happened during the course of the week and what led to the decisions we made. Now, at the beginning of the week here, we can see we had this range-bound structure where price was confined within the $75.48 and the $74.80 area, giving us a range-bound structure to work with ahead of the new week. And of course, whenever we have this kind of structure, we want to wait for price to either break down the support line to give us an opportunity to sell, or the breakout of the resistant line to give us an opportunity to buy. And coupled with the fact that price action was sitting above the ascending trend line here, it was a promising uptrend scenario that we were looking out for at the beginning of the week. And of course, look at what we did. We joined the bullish move at the breakout of the $75.48 level, added one more position at the breakout of the $75.81 area, and as at the first trading day of the week, we were able to scoop in about over 300 pips in profit on that particular buy position. And fast forward to Tuesday's session, we saw price consolidated after price testing the $77.50 area. And of course, for those who saw my commentary on Tuesday morning, I did mention that we are going to be joining a sell if price breaks down both the ascending trend line and the $77 area. And look at what happened here. We saw price break down the structure, and then price drop significantly to the downside, giving us another significant move. Now, on Wednesday, during our Forex Morning Mastery session, we did acknowledge that price action is going through a choppy scenario at this point in time after breaking down that ascending trend line. And of course, if you remember vividly, we identified a potential reversal setup on the 50 minutes time frame, where we were looking out for price breaking out of the $75 area to continue the uptrend move. But unfortunately for us, that position did not do very well, as we got taken out of that one in a loss. And yesterday I updated us that we have a demand zone here, and that we will be looking out for buying opportunities only if price action breaks above the $74.80 level. And considering the fact that price is sitting above that demand zone, it made a lot of sense for us to continue that uptrend from that particular area, and that the only condition that will make us sell is for price to break down the $73.80 level. That is the lowest point price action has been for this week, which obviously never happened. So with the buy position triggered at the $74.80 level an hour into the New York session yesterday, we currently have this position still active with about 115 pips in profit. And for those of us who capitalize on this opportunity, well done and kudos to you. So it's high time you want to be moving your stop losses right now. Let's secure this current position, and I would advise that anywhere around the $75.70 level seems most appropriate to move our stop losses to. So the worst case scenario that will happen here if price takes us out will be a 80 pips profit. So let's ensure we move our stop losses accordingly, secure this current position while we look out for new trading opportunities. Now, with that said, with a well secured position at this juncture, what is going to be our plans as we prepare for the final trading day of the month? Now, before we go into the technical details of the structure, it's important for us to also keep tabs with the fundamental factors that is driving the sentiment in the market, so we can know where the market is likely going to lean towards and use that information to strategically position ourselves for the next move. Now, oil prices has been rising, of course, due to supply concerns in the Middle East, which is something that we've talked about week in, week out on this one. And of course, to add to the dynamic in this market is the recent development in Libya, where they're having production issues. And as at yesterday, when I was listening to Bloomberg, over half of Libya's oil production is offline, and with a potential losses reaching up to 1 million barrels per day, this is going to be affecting the global supply in the crude oil market, and this could likely influence an increase in demand, which will dovetail to higher prices. Then, of course, we also heard about Iraq's output cuts yesterday. Iraq is planning to reduce oil production next month after it had exceeded its OPEC plus quota for the month. So because of this, they will want to reduce their production for next month, which is definitely going to be affecting the global supply in the oil market. Now, besides that, we also have the US dollar and the Fed reserve outlook, which is also which in fact has been influencing the USOILSPOT market in the last couple of weeks. Remember, the sentiment surrounding Fed reserve cutting interest rate next month has increased the price of US oil due to the increased demand, as majority are taking advantage of this sentiment to boost their reserve. Now, yesterday we saw on Wednesday we saw the US GDP growth, which also has boosted confidence in the US dollar, and this could exert some selling pressure. So we cannot ignore the fact that selling pressure could come in anytime soon. And of course, the weakened demand from China, as concerns about China's economy continue to dampen global oil demand. Now, we have about 5 factors here, where 3 is leading towards a positive traction in favor of the USOILSPOT, while 2 is potentially exerting pressure on oil prices. Now, how is the market digesting these contrasting views? And this, of course, we are going to be seeing on the chart as price action. So if we take a closer look at this chart and looking at what has been going on since the beginning of this week, one thing I can say for sure here, which is quite significant, is the fact that the $74.88 area had been a strong buying niche since the beginning of the week. And if you remember vividly, at the beginning of this week, this area here was that demand zone that started that first bullish leg we enjoyed at the beginning of the week. Though price came back into the structure, and of course we saw a lot of choppy market conditions between Wednesday and Thursday's trading session before price finally picked back again above that particular area. So for me, at this particular point in time, even though price is still finding struggling to continue the momentum, I will continue to maintain a bullish bias as long as price remains above this particular structure. Now, with that being said here, looking at what is going on, hold on a second. Since the beginning of the week, it appears if we connect the series of lower highs here, you will see that we have a descending trend line, which obviously supports this bearish bias here. Now let's bring back our candle chart and let's do some connections here. So we have this one, so we have a descending trend line right here, and in fact, for us to continue the uptrend, or let's say for us to add more buy positions to our existing positions, we will want to see price action breach and break out of this descending trend line to give us that comfort to join an uptrend move. Now, what levels are we going to be using to navigate this current structure? Well, let's see. Bringing out our line chart here, I want to see price break above the structure here, which interestingly shares a confluence with that descending trend line. So we are looking at $76.30 level. So let me just mark out this level here. I'm not sure. Okay, $76.30 area. So you want to be marking out this level accordingly on your chart, as we are going to be using it to navigate this current structure. And let's see. So bring back our candle. Okay, beautiful. So here we have a confluence between the trend line and that key on that level at the $76.30 area. So we are looking forward to price breaking out of the structure, giving us a new opportunity to continue the uptrend move. Now, for those of us who are joining for the first time, for those of us who are yet to take advantage of any trading opportunity on the US oil spot, you want to wait for confirmations to happen, like a breakout, then retest of structure, giving us that leverage to continue that uptrend move. However, if you've been part of this profitable journey since the beginning of this week, well, we can afford to bank on the profit we had made so far this week to test waters around this particular area. So placing a buy stop order above the structure makes a lot of sense for us all, and then we will continue to see how far this momentum will go, and if there are new opportunities to maximize the potential of that bullish move, I will definitely give us updates on both my TradingView and Telegram platform. And please remember that for those of us who still have a buy position running, I mentioned where we are moving our stop losses to secure the current positions while we anticipate the core PCE coming up later today. Then in terms of selling the US oil spot, what are the conditions that will make me sell? Well, if we look at this descending trend line here, the first thing that comes to mind is selling the US oil spot because price is within it below the descending trend line. However, if we take into account where price action is coming from, especially after considering this week's trading activity, where the $74.88 area has been a strong demand zone, for me, I don't think it is reasonable looking out for buying up selling opportunity above a robust demand zone, which have served buyers since the beginning of this week. Instead, price could drop into the structure and continue that uptrend again, considering how that area has been a strong buying niche. But if you are a scalper or somebody who is willing to take advantage of counter trend opportunities, well, it is something you might want to be looking out for. That's about 100 pips move, but personally, I'm not keen on taking that kind of position, especially when price action is sitting above a robust demand zone. Now, for me to start considering selling, I would rather want to see price break down that demand zone. As you will see, we have this demand zone right here, which is between the $73.80 level and the $74.50 area. As you will see, even though we had the strong bearish move on Tuesday/Wednesday, you can see how it became difficult for sellers to break through that particular structure. Now, for me to consider selling today, I would rather want to see price break down, retest that demand zone before I can start considering selling, which I doubt will happen today. But if it does happen, let's be on standby to capitalize on that move. So that is that on the US oil spot today. I still maintain a bullish bias, and I'm looking forward to price breaking out of that descending trend line at the $76.30 level to add to my existing buy position. And if it so happens that price drops from this area, taking us out of that buy position, well, let's see how the market will react to the $74.80 area. If we see buy pressure, I will be joining another wave of bullish momentum from that particular area. So this is my simple view on the US All Spot for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So in the absence of no questions, I want to assume we are all on the same page. So let's see how the market will play out in the next couple of hours, especially as we look forward to the US core PCE. I hope you've marked out these levels accordingly on your chart. Remember, we are going to be using it as a reference point guiding our independent trading decisions today. So best of luck on the US All Spot. So let's move on to the next asset on our watch list. So the next asset on our watch list is the GBPUSD, that is the British pounds against the US dollar, and in fact it's a very choppy market in the last couple of days in this market, resulting in a couple of losses for me, as I had losses taking the sell, I had losses taking a buy in the last couple of days. I think I had 2 losses on the GBPUSD as a result to this choppy market condition. And of course the improved US dollar as driven by the stronger than expected economic data release has influenced this choppy market conditions, where buyers of the pound sterling have been doubting their decisions of continue to hold on to the British pounds. Remember, we talked about the US GDP exceeding all market expectation as it grew at an annual rate of 3% in Q2, surpassing the expected and previous growth rate of 2.8%. And of course, we also saw the falling initial jobless claim, where the number of people filing for unemployment benefits fell to 231,000, slightly below the market has expected to, which is of course a good signal that the labor sector is expanding at this point in time. And of course this has influenced the US dollar positively, giving it a traction against the British pounds. Now the question here is, will this traction continue? As you will see here that it has beginning to struggle since the New York session yesterday, where sellers have been finding it difficult to continue that momentum to the downside. And for me, this is looking more like a demand zone to take advantage of more buying opportunities. So this morning when I saw this, I took a buy position at the break of the 1.316190 area with the hopes of continuing the momentum to the upside from here. Now, talking about the fundamental factors behind the scenes, we should not forget the dovish Fed remarks from the Fed Reserve officials. We talked about this earlier. All of them talked about all of them hinted at potential rate cuts due to cooling inflation and higher unemployment, but wants to wait for further data before deciding this. And one of those data is what we are looking forward to today. The core PCE, which I did mention earlier, is also considered to be an inflationary gauge data. So it's going to be giving us an insight into how the inflation is being in the United States. And of course, we're also going to be looking forward to another labor-oriented data, which is the NFP coming in next week, which is also going to be bringing some fresh impetus into this particular market. Now, from the UK front, there's nothing really for this week. There are no major events to drive price of the British pounds this week, as the British pound has been at the mercy of economic features from the United States. However, the Bank of England's governor's outlook on inflation was further emphasized yesterday. Was it yesterday or Wednesday? Where he indicated that the impact of inflationary pressure might be less significant than anticipated, but advised on any further interest rate cut at this point in time, which could be a very good signal for the British pound, and this could likely be at the beginning of another leg of bullish momentum. Now, after taking into account all of these fundamental factors behind the scenes, how is the market digesting this information, and how are they preparing for the next move? Will they still continue to hold on to the British pound based on this information we just heard, or are there chances that the US dollar will continue that positive traction that it started on Tuesday? Now remember, on the GBPUSD for this week, we started buying the GBPUSD at the beginning of the week. We had this move right here at the break of the 1.31950, had about a 75 pips move, though we had two more buy positions added to that trade. We had some profit on that one, but the profit we made so far on the GBPUSD this week is not really significant considering the losses we incurred on this particular asset. Remember, at the beginning of the week we had a loss here, joining a bearish move which never sufficed, as you will see here. And of course, yesterday, between Wednesday and Thursday, we also had a loss here, buying the GBPUSD, and of course selling here too as well, taking me into a loss. So 3 losses in a week after profit of about 100 pips makes us not marginally too good on this portfolio. So let's see if we are going to be recouping the loss we incurred on the GBPUSD today. We hope that we see some significant traction in price action. Now let's go back to how is the market digesting the information we talked about here. Now, looking at the structure here, looking at how price action has been behaving since the beginning of the week. So the week started around here, that is around here, around the 1.32100 area, and of course we saw during the first trading day of the week where price was finding lower highs, and that resulted into this you can see here. After connecting the series of lower highs, we had this beautiful descending trend line, which has played a significant role in guiding our trading decisions for this week. Now we saw price break out of that descending trend line here, which triggered our first buy position for the week. And theoretically, when price breaks out of a key structure like this, expect at some point in time price will come back to retest the structure, which is one of the reasons why I actually bought the GBPUSD again here. And as you see, it came back to break even. I also joined the gain here, but unfortunately it went into a loss. And look at what happened. Price appears to be coming back to retest that structure for the second time, which for me is going to be a good signal that buyers are still very strong in this market and they are likely to continue the uptrend move. And look at what happened during the Asian session. We continue to see buy pressure around this area, which is one of the reasons why I have joined a bullish move from this area. So I still think that the path of least resistance for the British pound still remains to the upside around this area. So I currently have a buy position triggered at this point around here, and I'm looking forward to adding more at the breakout of the 1.31915 area. And of course, we'll continue to look out for more buying opportunities if price goes ahead to break out of the 1.323 and of course the 1.32635, the highest level for this week, to maximize the potential of this bullish move. So I maintain a bullish bias on the GBPUSD today, as long as price still remains above this descending trend line that was breached on Tuesday. So that is what I'm looking at on the GBPUSD for today. And considering selling, I'm not seeing any selling potential around this particular area. Well, let's see, saying something here now. If we connect the series of lower highs here, we can see we have something that looks like this. Now let me thicken it a little bit to emphasize its importance at this point. So if we bring back our candle chart, you can see we have some series of lower highs here, and look at how in the last 3 hours price action has been consolidating around that trend line there. So I'm waiting for price to break out of the structure. If it does break out, well, this will be a beautiful opportunity to continue the uptrend, and in fact it will give me more confidence to add more buy positions to my existing trade. But if sellers continue to persist below these trend lines, for me to join a bearish move at this juncture, rather want to see price take out this demand zone here. Remember, this area here has been a strong buying niche, as every attempt by sellers to break through in the last 24 hours has failed at every point in time. So for me to sell, I would want to see price break down this demand zone and then give me some confirmations to happen before jumping into a bearish move, which I doubt will happen today, even if sellers are going to be coming into play. So this is my simple view on the GBPUSD for today. I hope I made myself clear, but if you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will take the next 10-15 seconds off. Let's see if there are any questions before we go ahead to our last and final asset for this week. Stay tuned in, guys. So as you will see here, I just noticed something now while I was looking at the charts, a new structural detail which could actually guide bearish potential if ever sellers is going to come in today. Now I have a new ascending trend line here. Let me zoom in so we can see things more clearly. Now looking at the structure here, I just saw this ascending trend line here after capturing the series of higher lows since the New York session yesterday, which has been supporting this recent uptrend scenario we are seeing here. Now, if it so happens that price breaks down this ascending trend line today, this could probably give us a signal of a bearish move, but I would rather want to see price do something like a confirmation retest of structure. Then we're looking out to sell below the 1.31 31690 level today. So let's see how the market will play out around this area, and in fact this is subject to what the US core PCE is going to be saying today. Sheriff Abdul Kadiri, good morning to you. And Sheriff says, can we consider 1.32300 level as the neckline of the head and shoulder pattern? Okay, so let's look at this together right here on the 1 hour time frame, you mean. So if we look at the 1 hour time frame here, this is the 1.32300 level, and you say you want to consider this as the neckline of the reversal pattern. That is the head and shoulder. I'm not sure this is going to work. It's not I'm not sure, it is not going to be head and shoulder. Is it an head and shoulder or an inverse head and shoulder pattern? Where is the head? Where is the shoulder? Where is the 1.323 doesn't serve as a neckline at this point. The only thing that I can see here which is close to an head and shoulder pattern is this impulsive move that started a couple of weeks ago. Now if I draw that out, this could likely be the left shoulder. This is the head, and probably this is the right shoulder, which is not really an head and shoulder, because for your head and shoulder to mature, your neckline must be in alignment, must line up and connect the left shoulder and the right shoulder, which is not the case scenario here. But instead, if you do want to be finding a pattern out of this old structure, instead it's more like an uptrend continuation pattern. So let me show you here. This is an impulsive move, and then we see a consolidation phase. So it's more like a flag pattern or a pennant, depending on which perspective you are looking at it from. So the breakout of the pennant or flag pattern will be all we need to continue that uptrend continuation. So this is looking more like an uptrend continuation pattern, if you would ask me. And in fact, we are already in alignment with that particular setup to continue the uptrend move at the break of the 1.31915. I mean to say, okay, you said I mean to say right and left shoulder. No, it doesn't work. It doesn't work. It doesn't work. It doesn't work for it. Right and left shoulder. So okay, the right and left shoulder, it doesn't work. So where will the neckline be? The neckline will be here, but the neckline is not the support line for the troughs of the head of the left and right shoulder. Is not serving as a trough, so it's not a an head and shoulder pattern at all. All right. Okay, so with that being said, we will be moving on to the final asset on our watch list for today. Stay tuned in, guys. So you're welcome, Sheriff Abdul Kadiri, and thanks for your contribution. I really appreciate that anyways. All right, the next asset we are looking at, and the final one, is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot this week, it hasn't been as positive as we usually do on the XAUUSD. In fact, the US All Spot was able to take over the XAUUSD on our portfolio for this particular week, as the market has been more of a choppy condition since the beginning of the week, as every move we take here is not really moving very well, leading into a very difficult environment scalping this particular market this week. Now let's quickly run into what has been going on in the market since the beginning of the week and what has led to the situation that we are right now. So at the beginning of the week, we had high hopes that price will continue to find new highs due to a lot of various factors behind the scenes, especially after the Jackson Hole Symposium session, where the Fed chairman indicated a dovish outlook, emphasizing that interest rate will be cut next month, but is not sure at what magnitude is going to be. So he wants to be waiting for another labor-oriented data to decide if it's going to be a 50 basis point or a 25 basis point cut next month. And as a result of this, we had very strong hopes that price will continue the upside. And to further support that was this beautiful ascending trend line we projected from last week, Thursday, capturing the series of higher lows in this market. And with this whole situation here, we were looking out for structures and patterns that will support the idea of buying the asset. Now, the first thing we noticed at the beginning of the week, after monitoring price action for about 8 hours or so, we saw a range bound structure where price was confined within the 2,517 and the 2,509 to emphasize the prevailing uncertainty around this particular area. And for the fact that this whole consolidation phase was happening above that ascending trend line, it was quite a reasonable that we place a buy stop order above the resistance line to capture the uptrend continuation. And look at what happened here. We were able to join a $100 move, but it never lasted. As you know, price dropped significantly to the downside. Of course, we moved our stop losses accordingly, secured about 50 pips move on that one. Then price dropped again. We saw buy pressure resume again. We joined, but unfortunately it did not do well, as we saw price drop significantly to the downside. Now between Tuesday and Thursday, Tuesday, Wednesday, and Thursday, this area has been a strong demand zone, welcoming buying ideas. Of course, whenever we see this kind of scenario, it always makes sense that we look out for buying opportunities. We can't be selling above a demand zone. It doesn't make any sense. So as a result of this, we had some buy positions here as well. We had about a 170 pips move before this bearish move happened, and later in the week as well, we saw price come back into this demand zone. And in fact, we had a new trading setup on Wednesday to guide our trading decisions going forward. So we had let me open our new structure. Okay, so this was a new structure we identified on Wednesday, and we said we are going to be using the structure to navigate this current market dynamics for the remainder part of this week. Now, one thing you will have noticed here is how our key level for this week, which is cited at the $2,495 area, had played a significant role in negating any downtrend continuation here. Now, as soon as price gets into that key level, you can see how buyers jump in to take over the market. Look at what happened here. Buyers jumped in, We saw what happened here again on Wednesday. Buyers jumped in again. So this area now served as a robust demand zone for us, looking out for long-term buy position. And thank goodness on my swing trading account, we had a buy position triggered at the 2,508, which is currently running with about 175 pips in profit on this particular one, though price dropped down. So because of this choppy market condition, I didn't move my stop losses at all. I just wanted price to play out, because if you get stopped out and you are not around to join back in, you might miss out on that position. So I just left it. So the worst case scenario was for me taking it out at about 77 pips loss if price drops to the downside. But thank goodness the position still remains running, and I do hope you have your positions active as well. But for scalping, it has been a very, very tedious week for me personally, trying to catch this bullish move with a very small stop loss, as it has been very, very difficult. But I'm very sure that we're still going to catch up with the big moves when they finally come, so that we can recoup the losses we have incurred so far. But at this point in time, what are the chances that this uptrend will continue to the upside? And before I go into that, I would like to say that for those of you who captured the breakout of the $2,508.50 level, kindly move your stop losses to around the 2,512 level. Secure this position as price is back at the resistant line of that range bound structure, which has captured this market since the beginning of the week. So if I want to highlight that out for you, so you can see we have it at exactly the 2,527. So price is back at a very strong resistant level. So we need to move our stop losses, secure this position, as we never can tell what will happen around this area. Look at what happened here on Monday. We saw as soon as price got into that area, buyers lacked that momentum to continue the uptrend move, and as a result, sellers took over the market, pushing price to the downside. The same thing also happened on Wednesday, and of course we saw what happened yesterday as well. Right now price is back into that resistant line. We need to exercise patience and see how the market is going to be reacting to this particular level. Is it going to break out the level to continue the uptrend move for the first time this week, or is it going to respect it just like it has been doing since the beginning of the week to push price to the downside? So for me to sell here, I will be looking out for a reversal setup around this area to join a bearish move with a very small risk, because we are on an uptrend scenario, and for me to sell, it's more like a counter trend opportunity. So I will be risking very little, and this is going to be a scalping approach. Of course, this is not a swing trading approach at all. How will price break out of the structure to continue the uptrend move? So this is where we are right now, and it's a dilemma we need to resolve. Now, to understand this, we need to take a look at the major drivers in this market. What is really driving the sentiment in the market behind the scenes? Now, first of all, we need to acknowledge the fact that in the last couple of days, or last 3 days or so, the dollar has gained some momentum, and as the upbeat US economic data boosted sentiment in favor of the US dollar. And of course, the Asian stock also rose significantly over the last couple of days after the US economic data suggested that the economy is not heading for recession, and this obviously has exerted selling pressure on the XAUUSD. And then we also talked about the US GDP data, which showed an increase of 3%, dispelling recession concern at this point. And of course, to further add to the dollar's positive outlook is the initial jobless claim, which also showed a slight decline, and of course, which also shows that the labor sector is still doing very well. Now, to support the uptrend scenario of the XAUUSD is the Fed interest rate cut expectations, as markets still expect interest rate cuts by the Fed next month. And in fact, market is looking at multiple interest rate cuts before the end of the year. September, October, November, December, market are expecting at least 25 basis point cut through the end of the year. Will this suffice? Well, we don't know, but next month we know that there's going to be an interest rate cut next month. But like the Fed chairman said, we want to wait for labor-oriented data, which everyone is going to be looking forward to, the US NFP next week, for another clue into how big or small interest rate cuts will be. Then another factor behind the scene is the Chinese gold import. Remember, China has been one of the major driver of the gold market for the last 18 to 20 months, as they have been buying gold, stocking up their reserve through the course of this whole period. And in fact, last month, July, report came in that Chinese gold imports increased by 17%, marking the first rise since March. And according to the World Gold Council, it appears that China has not yet stopped buying the gold. And remember, we have other Euro-Asian countries like Russia, India, Uzbekistan, and these countries have kept on buying gold in the last 1 year, increasing the demand for gold as a result of this. So I still think the path of least resistance for the XAUUSD remains bullish, but what we are not sure of right now is what path is it going to take. Is it going to retrace a little further, or is it going to continue the uptrend from here? Then another major factor which I have not mentioned, I have refused to mention in the last couple of weeks due to the political sentiment around it, is the BRICS attempt to de-dollarize the global economy. And this move by the BRICS to reduce reliance on the US dollar, with gold as a likely replacement, has also boosted the ascent of gold prices, which for me further makes this part bullish for gold. Now, if we look at the these figures here, the dollar still plays a significant role in determining whether the gold will continue to the upside or not, and that is subject to the potential interest rate cut coming up next month. So we are looking forward to the core PCE coming later today to give us an insight if inflation is still persistent in the US or not. And if the PCE comes in higher than market had expected, we may likely see a crash in the gold today. But if it comes in lower than market had expected, or comes in just as market had expected, then there is a high chance that gold will continue to rise today, breaking out of that resistant line to continue that uptrend move. Now, besides all of these factors I've talked about, the TD Securities, which is an affiliation in the United States, warns of a downside risk due to overcrowded long positions in the derivative market, prompting a tactical short position in gold for them. So the TD Securities are looking at shorting their own gold portfolio, which for me is another concern right now, which is adding to the dilemma I'm having right now. Now, within this old indecisive phase, in this old dilemma we have right now, how are we going to navigate this complicated market dynamics today? Now, the first and first we will need to do is make things as simpler to understand what is really going on in this market. Now, taking into account what has been going on since the beginning of this week, it is quite clear the market has been choppy, trapped within a range-bound structure since Monday's trading session between the 2,495 and the 2,527. So what this simply means is that market has been trading within a range. They will buy here, sell here, buy here, sell here, buy here, and sell here. Now, right now, price is at the resistant line. Is it high time to start selling from this particular area, or will price break out of that structure? I think major key players will have stepped aside from the market. There's likely going to be low liquidity right now as market participants look forward to the US core PCE today before making any informed decision. So for me too as well, before I can think of adding more buy position or considering selling, I would want to see the PCE come out first, let the volatility happen, and when price settles down, then I will look out for positions, maybe around the resistance line to sell, or maybe around that demand zone to buy. And if we break out of the structure, then we are going to be looking forward to price coming back, retesting the structure, making that area as a demand zone, then we'll continue the uptrend from that particular area. So at this point in time, my advice here is that let's move all stop losses. If you have a buy position running at this point, let's move all stop losses. I said move stop losses to the 2005-15 area. Secure this position while we continue to monitor price action around this area. So this is my simple view on the XAUUSD for today. And besides this, let me scale down into the 15 minutes time frame. Let's see what is going on around that 2005-27 area. Are there signs of sellers trying to come back into this market? Well, let's see. The 15 minutes time frame is here, and look at what is going on. Continue selling pressure happening around this area. We're looking more like a sign that sellers are going to come into play anytime soon. So let's do this quickly. Let's analyze this area quickly and see if we can actually on the 15 minutes time frame. So I want to reduce this one. So we have the 2005-27 just right here, and then we've seen selling pressure persist around the structure. So let me just zoom in. Now look at what we have. After this impulsive move, we have a consolidation phase happening here. Let's bring out our line chart. We have a support line here at the 2005.22 $0.60 area. So let's mark that to level out immediately. 2005.22 $0.60 level. So we have a consolidation phase going on right now. Price caught within a range bound structure, and you know how we treat our range bound structure. Of course, we want to exercise patience. As you will see, we want to wait for the indecisions to end. As you can see, buyers and sellers are negotiating here. So who is going to win this tug of war? Is it going to be the sellers? If it's going to be the sellers, we want to see price break down, retest the 2005.22 for us to jump into a bearish move. And in fact, if price breaks out of the 2005.27, we want to be looking out for buying opportunities. So for this approach here, let's see how the market will react to this range bound structure we have here, and that will determine what our next line of action will be. So I see your comment here, Ismail Napari. Good morning to you, Ismail. Ismail says here that market has been kicking me out and moving in my direction, leading to blowing off my account. Please, what is the ideal capital should I fund my account, and which management should I apply? Very sensitive and interesting question you ask there, Ismail. So first of all, the thing I would say here is, what is the risk you are putting in your account? Do you know what your risk appetite is? This is one thing I usually tell my clients. What is your risk appetite? And what do I mean by risk appetite? Risk appetite means that what percentage amount of your portfolio can you afford to lose on a single trade without it affecting your emotions? What amount can you lose on your particular trade without it affecting your emotions? The reason why this is important is simply because if you lose an amount that your emotions cannot manage, what happens is that your decisions get clouded by this emotional imbalance, and what happens is that you do not make the appropriate decision in your next positions you're about to take, and it goes on like that in a circle till you lose all your account size. Then you go back again, you refund your account and start all over that cycle again. So it's important for you to understand what you can afford to risk. Now, Deciding what you are affording to risk is not subject to the profit you are looking at. There is a quote right here I usually mention to my client. It says here, the expectation that you bring with you in trading is often the greatest obstacle you will encounter. And this is by Bayaje. Is one of my mentors, is a great technical trader too as well. And so what it simply means is that the expectation we bring into the forex the forex market is usually that is hindering us from becoming successful. So if you've seen the forex market as a get rich quick scheme, then definitely you're not going to be successful. Now it has to take time, persistence, and understanding of the sentiment in the market that makes you become successful. Now, you must understand this. That's first of all. Then secondly, what is the risk appetite that you can? Is it 1% of your account size? Is it 2% of your account size? Is it 5% of your account size that you can afford? That is subject to you. No one can tell you that. You need to understand this. That's trying to know yourself. Then after sorting that out, then you want to be consistent with what you are risking per trade. So now after sorting this out, you need to also understand that every decision you make in the market is more or less an educated guess. No one knows where the market is. Even the big hedge fund managers don't know where the market is going. So because of the fact that you don't know where the market is going, you want to risk as little as possible so that even when price takes you out, you can leave to trade another day. Now, I don't know how much you are risking, I don't know how much you have on your portfolio, but personally, I usually say $1,000 is the most appropriate account that you can have to trade. Reason being that with a $1,000 account, let's say you are trading the gold now, you can afford to have a stop loss of 100 pips. Now, if you are risking 1% of your $1,000 account with a 100 pip stop loss, that means for every losing trade, you are risking $10. So you have enough breathing space for price to move around to capture all the volatility that happens during the week before price action moves in that particular direction. So with a $1,000 account, you can risk 10% of your account size and still be very profitable at the end of the day if you are consistent with that approach. But if we are trying to trade with a small size account, it then becomes difficult. You can afford to do a 100 pip stop loss, and that is where the go challenge comes in. I just started the go challenge about last month, and it's a challenge on my own side. I'm trying to see how well people with a $200 size account can afford to turn that account to a profitable account within a specific period of time. And when you're doing that, you want to be risking as minimum as your stop loss will be as minimum as, let's say, 20 pip stop loss, 30 pip stop loss thereabout, and see if you can catch the big move. And that is what I've been doing in the last month. So I hope I answered your question, Ismail. I could go on and on this one. I just hope I answered your question there. If you ask me what's the ideal capital, $1,000 is reasonable. But if you cannot afford $1,000, then you need to be able to time your entry very, very well so that you don't your stop loss is as tight as possible. So that is what I would like to say there, Ismail. Do you have any other questions on that one? And I guess we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys today. I really enjoyed every single moment, and we were able to take on these assets we were looking at for this week. That is the USOILSPOT, the GBPUSD, and of course the XAUUSD, where we identify simple trading setups to guide our decisions for today. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have a well-defined risk management strategy in place to protect your portfolio against any of the sudden move the market could make at any point in time, so that you can live to trade another day. And for those who joined us for the first time today, I'm glad to have you join me today. I hope you are able to gain one or two things from what we discussed here today. And in fact, I look forward to seeing more of you same time next week, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review and start a new week on a positive note. Richard Blackett, oh, you are here. How are you, Richard Blackett? Good morning. Okay, so okay, I'm glad you found that useful. Risk management is very, very important. Don't get carried away with the fact that you want to make that money in one day. Don't get carried away with the fact you want to make that money in 1 week. Sometimes you have to be looking at a 6-month projection. Sometimes you have to be looking at a 1-year projection. Sometimes you have to be looking at 3-month projection, long-term projection. If you can do that, and when you're looking at a long-term projection, just make sure you are consistent with your approach. Even when you have that losing streak, there is no trader in the world that does not have his or her own losing streak. So when you have that losing streak, it is normal. Just ensure you are consistent with your approach, and when the winning streak comes, you will still be in the market to trade. You would not have blown your account when the winning streak comes to trade and recoup the losses, and of course make more money on top of it. So long-term projection is very, very key. So if you are not that type of person, well, the forex market is not for you. Now you'll say there are some people who will tell you that they flip their account within 1 week. Yes, they do. I'm not disputing that. A lot of people do that, but how well have they been after flipping the account? Because the moment you start flipping your account, you will be trapped in that mentality, and by the end of the day you blow that account again. Because okay, let's say for instance you flip a $500 account into, let's say, 2,500. Now that 2,500 account, you want to flip it again into, and then you blow it out. So instead of you, after flipping, making that money, keeping it to yourself, you say you put it back into the market, then you burn it out again. So this is usually a cycle that most people get themselves caught up with. Instead, I'll prefer being consistent, staying faithful with your approach. Go take it a step at a time, slow and steady, you will win the race. So it's on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening. And I wish you a wonderful weekend and happy new month in advance. Bye.